Good morning and welcome to IG's early morning call. I'm Angela Bunce. Coming up on today's programme. Well, all eyes on US inflation data today, with currency traders in wait and see mode ahead of the latest US CPI report. Also, Home Depot earnings are out today. Margins are expected to be squeezed further as consumer demand weakens and input costs rise. And oil prices rebound after OPEC increased its 2023 forecast for global oil demand growth. Well, with 30 minutes to go, though, until the European markets open, let's take a look at how things are looking across Europe this morning. So firstly, let's have a look at the FTSE, poised for a lower open, currently down 0.2%. France's CAC 40 flat, and Germany's DAX also just marginally higher, up 0.006%. So a pretty flat open this morning. But investors will be digesting, of course, Morgan Stanley's comments as well. The bank said it expects the UK to be in a technical recession by the end of the year, with the economy shrinking by 0.1% in 2024 before growing by 1% in 2025. Meanwhile, financial markets are currently predicting that rates will have been cut to 5% by next June. Well, let's have a look now at how things are looking overnight in Asia. Because Asia Pacific markets, well, they all rose as investors look ahead to highly anticipated talks between the US and China, as well as more economic data. You can see Nikkei 225 up 0.34, the Hang Seng also up, and the S&P ASX 200 in Australia also higher. Today, investors, as noted, will be looking out for the outcome of talks between US President Joe Biden and Chinese President Xi Jinping in San Francisco later today. Well, in the US as well, stocks were mixed, as noted, as investors geared up for a key US inflation reading and a week packed with the insight on how consumers are holding up in the face of high borrowing costs. You can see the Dow Jones Industrial Average ended higher, the S&P 500 and the Nasdaq, though, both finished in the red. Well, today, as noted, the US CPI and the China talks, investors will also be keeping across retail earnings, including from Home Depot, Target and Macy's and Walmart this week too. But first of all, let's go to Australia now in economic news, because consumer sentiment was dampened by the latest RBA rate hike. The Westpac consumer sentiment fell 2.6% in November from October. NAB business confidence also slipped 2 points to -2. And let's move on to some breaking news now, because we've got figures in on UK jobs this morning. The unemployment rate remains at 4.2% in September. The consensus had been for it to be at 4.3%, and average hourly earnings, excluding bonuses, were at 7.7%, so unchanged. The markets have been expecting, as they said there, the consensus at 4.3% and a 7.7%. And so that is the latest UK jobs data out this morning on the UK. Let's move on now, because it's going to be a busy day as well in markets in the US. This afternoon, headline CPI is expected to rise by 3.8% in October year over year, after a 3.7% increase the previous month, while core CPI growth is forecast to remain at 4.1% in October. Well, let's have a look at the US dollar basket, because investors will of course be keeping across that currency today against its other peers. It's currently flat. Well, it's down 0.01% at the moment. Against the inflation backdrop, volatility, though, is likely to pick up, with market direction underlying FX moves dependent on the strength or weaknesses of upcoming consumer price data that we are expecting. And later this morning in Germany, we've also got economic sentiment data. The ZOE is forecast to rebound to 5 in November from -1.1 in October. This would be the highest reading since March. And also, we've got Vodafone half-year results today too. Operating profit has come in, at 1.65 billion euros, while revenues come in at 21.94 billion euros, and an interim dividend announced of 4.5. So that is its latest half-year earnings results announced this morning. And if we look at the Vodafone price chart, well, the company's share price has experienced a significant decline from late February, resulting in a loss of over a quarter of its value in just 5 months. However, since mid-August, the telecoms giant has seen its share price climb back up. It followed a positive trading update at the end of July as well. Since the 17th of August, it has gained about 10%. And then as well, we've got Imperial Brands as well, the British tobacco company, also releasing its latest financial results as well today. And so we will also be keeping across that. If we look at the price chart, Imperial Brands saw its share price climb in 2022 until mid-November. Since the 21st of November, its stock is down about 18%. However, it has reversed some losses since beginning of October. Now, Wall Street is bracing for weaker figures from US home improvement company Home Depot when it releases its results later after earnings reports from other home improvement chains have solidified growth concerns. While the company is expected to post earnings of $3.76 per share and revenue of $37.63 billion. That compares to earnings per share of $4.24 and revenue of $38.9 billion. It comes as Home Depot has been going through difficult times. Historically, home improvement stocks have been negatively impacted by interest rate hikes. At the same time, weakening consumer demand and higher input costs have squeezed margins. And if we look at the Home Depot price chart, well, year to date, its shares have lost 8%. Over the past 12 months, the stock is up 1% compared to a 16% rise for the S&P 500. Now let's move on as well and take a quick look at commodities, because both US crude is up 0.18 this morning at $82 that was Brent. Brent is up 0.23% at the moment, trading around $82 a barrel, while US crude also in the green, up 0.29%, trading around $78 a barrel. Yesterday, oil prices rose. Following OPEC's monthly report, the organization made a slight increase to its 2023 forecast for global oil demand growth and stuck to its relatively high 2024 prediction. So oil prices have remained elevated again in trading this morning. Last week, both Brent and WTI fell to their lowest level since July, in a sign that traders are growing increasingly concerned about the global economy and waning demand. Well, that's all we've got time for this morning on Early Morning Call. Thank you very much for watching, and do keep across our other shows that look ahead and beat the street this afternoon ahead of the Wall Street Open.